Prices of gold and silver continue to climb, with silver hitting fresh life highs this week amid strong demand and economic uncertainties. Over the past year, due to geopolitical tensions and global trade and economic uncertainties amid a tariff war unleashed by the US administration, investment demand for gold and silver has surged. Central banks around the world have also remained net buyers, further supporting the yellow metal. Meanwhile, silver also has strong industrial use cases, and that also supports demand. The US Federal Reserve's decision to cut interest rates this week by 25 basis points, its third rate cut this year, will also make precious metals more attractive. Global gold prices have surged 60% over the past 12 months. Value of silver, meanwhile, has doubled to more than $60 an ounce. The surge in value has attracted more investors. Global gold exchange traded funds are on track for their best ever year. Total assets under management of global gold ETFs have touched $530 billion as of November, and holdings of 3,932 ton were also at their highest month-end value ever. Demand trends in India are similar. Apart from strong investment demand, the rupee depreciation also adds into price pressure as India imports much of its gold. Gold imports into India hit a record $14.72 billion in October, aided by buying during the festive season and for weddings. Also, between January to November 2025, gold ETFs in India saw inflows of over 31,300 crore, almost 3 times more than the inflows between January to November 2024. In the domestic market, gold prices are up 65% over the past 12 months, while silver has more than doubled from a year ago. Will they continue to shine bright in 2026? Typically, precious metals like gold tend to go through cycles. After an extremely strong 2025, prices should remain range-bound in 2026 according to World Gold Council. However, if economic growth were to slow and our central banks to cut interest rates further, gold could yet deliver moderate returns, it says. Axis Mutual Fund analysts meanwhile say 2026 may bring bouts of correction and volatility, even as many of the drivers that fuel the rally in gold and silver in 2025 may continue to support. Higher real yields, a stronger US dollar, higher global growth, reduced inflationary pressures, and a hawkish US policy stance may erode demand for the precious metal. Additionally, profit-taking, weaker ETF inflows, commodity rotation into industrial metals, and easing geopolitical risks could also weigh on the prices next year.